So there's been a lot of criticism about Bitcoin with respect to Tether circling around our crypto communities lately. This happened quite a bit in 2017, but it has once again resurfaced in this bull run. And I read the piece and it does sound really convincing. And I know this because a lot of my beginner friends have been messaging me and saying, hey, are you worried about this? But I dissected the whole thing and I'm honestly not worried at all because many of their arguments are just flat out wrong. And it really makes me wonder what was their motivation to put out such a hit piece. Anyways, in this video, I'm going to summarize the entire Tether FUD article for you and give you a point-by-point rebuttal of it. So if that's what you're looking for, you're in the right place. Just sit back, relax, and just keep on watching. Welcome back to Bitcoin for Beginners. I'm your host, Kevin, and in this channel, we're all about deep research, honest opinions with no frills nor fluff. Since this is going to be a longer video, I leave timestamps below for you to skip ahead as you'd like. And please like and subscribe if you're looking for deep research and not just me shilling all the random projects to you and regurgitating the headlines to you. Okay, so this crypto anonymous author, who we don't know who they are, starts off by pointing out that Tether coins are pegged to the dollar, but they're not actually pegged one-to-one, and the company behind it will not ever do a third-party audit, and also their parent company is under investigation by the Office of the Attorney General of the Southern District of New York. He then shows some charts of how most of the volume and money flowing into Bitcoin is from Tethers in the crypto space. And he starts getting worried because he thinks that that means Tether is critical to the pricing and the functioning of the entire crypto space. He then digs a little bit further and finds that Tether is not on the reputable exchanges like Coinbase or Bitstamp, but rather the unbanked ones overseas like Binance, BitZ, and HitBTC, and how the volume supposedly dwarfs volume of the legitimate regulated exchanges. And that these offshore ones don't have good KYC or AML policies, that's know your customer, anti-money laundering, and none of them support US residents because they don't want the regulators to go after them. He then takes a look at the New York Attorney General's docket in their lawsuit against Tether and finds out that Tether has essentially been stalling as long as they can so that they don't have to turn in documents that could show what they did with their clients' funds, how they print Tethers and things like that. But Tether's company delayed as long as they can until the New York Supreme Court said no more. And now they have to turn over the documents in January of 2021, which is right now. And then he shows a chart of Tether's printing and issuance overlaid on top of Bitcoin's price and points out some specific periods of time where it increased a lot and was wondering whether that means that they're trying to exit scam and extract as much value out of the crypto markets before they just leave and peace out, essentially. He also openly questions, was Tether's printing causing Bitcoin's price increases during that time? Since he had that overlapping chart, but he also wasn't too confident about that conclusion either. Then he goes on this story about how he sold all his Bitcoin because he was too worried about Tether, but I mean, this is kind of irrelevant. No one really cares. Good for him. The next part of his article gets a little bit strange in my opinion. He talks about how he found a smoking gun in the case against Tether. And that's because one of his friends he talked to used some weird overseas derivatives exchange to leverage and margin trade Bitcoin. And he also points out how these exchanges offer USDT for giveaways, promotions, and so forth to get new users on, and says that this is proof that they value USDT less than it should be because other regulated exchanges like Coinbase don't offer USD in as free-flowing of a manner. And then another argument he makes is that USDT gets minted in nicely round, even number blocks, like 400 million at a time, for example, whereas USDC, which is a more regulated and legit stablecoin, gets minted in exact numbers, like 4,183,357, for example. And he claims that that is proof that that's more legit and the round numbers are not. He also dug into Tether's bank called Deltec, which is based in the Bahamas, and did some quick math because the Bahamas show publicly all the information on how much money is coming in and out of their banks. And he did the math and showed that all of their money aggregated could not add up to include how much Tether added during that time in supposed USD-backed reserves, right? And so he says that this is proof Tether was lying because its bank could not have had 25 billion worth of additional USD there to back the stablecoins minted. And then he takes a step back and looks at the bigger picture here. He says that he suspects Tether's company is handing over USDT to these overseas exchanges to help them with user acquisition via promotions and whatnot, and that these offshore exchanges offer USDT not as a bug, but rather as a feature, because it makes it harder for outsiders to dispute a one-to-one USDT to USD peg. And then lastly, he mentions that Kraken Exchange does have a USDT to USD market, but it's a rather small $16 million daily trading volume, and that this specific market is a critical peg to this fraud, and that they have to buy all the USDT traded in this particular bridge in order to keep up the facade. That's what he says, at least. Okay, so that's it for summarizing his arguments. Now for the point-by-point rebuttal. But I just want to say real quick that if you appreciate the deep research that we do in this channel, and as often as we do it, can you please buy me a coffee? If so, please use this QR code up here to scan it, fill out the form with whatever amount you're willing to donate to my coffee fund. And I'll also leave a link to that if you aren't on your desktop computer and can't scan that code in the pinned comment below, and I'd appreciate that greatly. All right, so now for the rebuttal, and I am going to cover all the points that Crypto Anonymous made, but I'm going to group it into 4 different types of counter arguments to make it a little bit easy to understand. Number 1 is, let's take a look at why claiming that Tether's printing and issuance was the cause for Bitcoin's price increase doesn't really make that much sense, right? Because remember, we have huge institutions and high net worth individuals coming in and buying Bitcoin collectively in the billions of dollars, right? And they're not using Tether to do this. They're using USDs and using prime brokers. So this explains a lot more for the recent price increase. And beyond that, retail is starting to get involved too. Remember, retail caused the last huge price rise in the last bull market. And this time too, we see search volume rocketing on both Google and YouTube. And Bitcoin has also been growing and increasing all along these past few years. If you take a look at a bunch of their fundamental metrics, they're at all-time highs as well. There's a great article written about this that I'm going to leave a link down in the description below that you should check out. But essentially, things like number of Bitcoin addresses with over $10 worth of Bitcoin, realized capitalization, open interest on options and futures, BTC held by Grayscale, and so much more are all at all-time highs right now, right? So it makes sense that price movement corresponds with these metrics breaking all-time highs as well. Or even the massive money printing by the Federal Reserve. That has caused a new narrative, which has gotten more people to take a look at hard assets like Bitcoin. These are much more likely to explain the price increase than the reductionist view that it's just Tether printing that explains this massive rise in Bitcoin's price. And the second group of counter arguments is, let's take a closer look at the Tether issuance and printing schedule and the arguments against what he said. I mean, the most logical explanation is that they mint more USDT or Tethers when there is more client demand and interest in the crypto markets, right? Like when volatility is high, when price is rocketing, when a dip comes, people want to buy the dip, they will wire in more money, or they just have more demand to buy Bitcoin. And in the past before, they have burned Tethers as well. So it's not just an ever-growing minting operation. They have burned it in the past in bear markets when activity slows. So that's a really fair way to look at it. Also, that whole argument about Tether being minted in nice round numbers is really irrelevant in my opinion. I mean, it's really logical to think that they can just issue it in batches in anticipation of deposits coming in, and even if it's not exactly the amount, they can hold some for later or burn it later, whatever, right? That all is perfectly valid in my book. And then they mention in their article that USD had some specific periods where it increased a lot, but I think there are some logical or common sense explanations for that I found. I mean, for example, one of those periods was in Q3, Q4 of 2020, but remember, Bitfinex had the regulatory issues when the government was coming after them. And even before that went down, Bitfinex started announcing stricter KYC policies. So a lot of their customers started to leave. And so that is important because in Bitfinex, their contracts are BTC denominated, but where they went, like Binance and other leverage exchanges, those are USDT denominated, they're margin contracts. And so what that means is when all those customers flowed over, they had to mint more USDT to get those contracts working and trading. So that's a very logical explanation of why those certain periods had larger increases than others in USDT issuance. And then some people argue that Tether's printing and issuance is directly causing Bitcoin's price increases. A respected Bitcoin data scientist who did a lot of research into the stock to flow phenomenon, both for and against it, did an analysis of this, and I'll leave a link down in the description below as well so you can check it out yourself. But essentially he did a statistical Granger causality test between Tether's printing and Bitcoin's price, since those are all publicly viewable on the blockchain and in historical records of the markets. And I'll just read you the definition. A variable X is said to Granger cause a variable Y if, given the past values of Y, the past values of X are useful for predicting Y. And this data scientist shares his code and does all his analysis, but the conclusion to share with you is that Tether's printing does not Granger cause Bitcoin's price movement, whereas the other way around, Bitcoin's price movement does Granger cause Tether's printing, which makes a lot of sense. As I've stated earlier, Tether, the company, prints more USDT when client interest increases in times of volatility, in times of price rocketing, or in times of buy the dip moments. All right, the third category of counter arguments is about the companies involved, right? Tether's company, Bitfinex, its sister cryptocurrency exchange, and both of their parent companies, iFinex. So let's take a look at the accusations there and how we should think about it. I mean, we've already known a long time that Tether's funds are no longer backed one-to-one by US dollars. That's old news, right? We knew that. But they're instead backed by a multi-million-dollar loan to Bitfinex, Bitcoin, and some other assets involved. And they did have a problem before when they lost $850 million worth of client funds with the whole crypto capital fiasco. But with their Leo token sale, the massive revenue from the bull market, and the increase in Bitcoin's price, they're more than likely fine by now. And any unbacked Tether left is likely a really small percentage of their overall reserves. And also the argument made about the Bahamian bank reserves is an interesting one and a good place to think about it, but it might not paint the whole picture, right? Because they may use other banks besides just Deltec, and also Deltec itself might have other repository banks in other places. It's just not conclusive proof that all of Tether, the company's balances, are all supposed to be in that one place. Also, iFinex, their parent company, really doesn't have that much of an incentive to drain the market of $20-odd billion captured in Tether's value right now, like the poster said they're going to exit scam, right? I mean, think about it. They have equity and other investors in their company, and that's worth way more than what they would get from pulling off this exit scam. And so why would they really want to do that? And in this case, if they did exit scam, they get chased around the world by all the different regulators and governments too. So that's just not a smart idea. And I don't really think that they're stupid enough to want to do that. And just looking at Tether, the coin's track record, it's been pretty resilient over the years, right? If they've been printing tens of billions of dollars worth of this unpegged crypto coin, how can that hold steady for so long, right? For years now. There's also more and more USDT and USD trading going on in the millions for daily trading volume. And this has been going on for a long time now. So how can it just hold for this long and not unravel? You should also think about something called the Lindy effect. And essentially, the longer something sticks around for, that means the longer it's likely to stick around in the future. And so this is also the case for Tether, right? The longer it has survived and not fallen to all these crashes and FUD predictions, the longer it's going to stay relevant in the future as well. And also, many people noted that multiple large funds in the crypto space, like hedge funds, institutions, and whatnot, have been redeeming USDT for USD and vice versa on a daily basis in the multi-millions of dollars. And this has been confirmed by multiple respected fund managers and investors in the crypto space. One guy even wrote that he's been minting and redeeming USDT on an institutional scale for 3+ years, and it's always been a smooth process, and he's done so with multiple desks. And he says he's done more minting than redemptions, but he's done both, and you can check it out on his Etherscan link because that's all public for anyone to view. Now, last but not least, the last grouping of counter arguments has to do with these unbanked exchanges that the original author skewers and points to some shadiness going on. Now, I do think a lot of them are shady, but I don't think that argument and the link that they're trying to make is accurate per se. First of all, he uses bad data to prove a point, right? The CoinLib data that he shows to show the massive amounts of funds between Tether and Bitcoin is not right, because a lot of those overseas exchanges have been proven to wash trade and fake their flow to make them seem more liquid, and that's all USDT volume. But if you look at credible exchange data it paints a drastically different picture. And you can see this from the Bitwise report to the SEC as well. So the flows that he's taking a look at in his graphic are actually not flows into BTC, but rather trading volume between traders for Bitcoin and USDT, and some of those traders being fake, which means those shady exchanges did it by themselves. Unbanked exchanges being larger in aggregate is not a conspiracy. Getting a fiat on-ramp is really hard to do. It's very cumbersome in terms of the regulations. And so these exchanges are just doing regulatory arbitrage. They're getting a stable coin, giving the traders what they want really fast, and hence more of these are popping up rather than having to go through the long process of setting up a USD on-ramp. Also, he points out this leverage trading going on that his buddy was doing as a smoking gun to his case, but that's honestly irrelevant to this Tether topic, right? He seems to think that this derivatives and leverage trading is the same thing as buying and selling Bitcoin and spot exchanges, but that's really not the case. And the fact that these exchanges use USDT to give giveaways and promotions, that's to be expected. They make their revenues in USDT, so if people are willing to take it as well, why wouldn't they give it out for customer acquisition to fund their promotions, especially since there's a lot of exchanges popping up, so you want to be competitive and get customers in fast, right? That just is a logical explanation. All right, so phew, that was it in terms of my counter arguments and my rebuttal. And I did get this from a lot of different places, so I want to give a shout out to the researchers and authors and leave links down in the description below. But also in general, my final thoughts, I'm not that worried about this, to be honest with you, and I don't think you should be either. Even if Tether does go kaput and disappear, I think Bitcoin would drop a little bit, but then it will re-enter price discovery and recover stronger than ever. And I personally also use the Tether USDT and USD bridge. I'm a guppy, I know, but I've utilized it fine to transfer USDT to USD multiple times for many years now, and it's always been smooth and always been around $1 exactly. So this really does sound like the same old FUD that we heard last time around, and it makes me wonder, is this crypto anonymous person the same Bitfinex person that used to always skewer Bitfinex and Tether saying it's a scam, it's a scam? But honestly, now no one really cares what he says anymore, and he really just seems like a loony bin who's just angry that he sold early and missed out on the Bitcoin boat. So what I think we all should be doing is just keep buying Bitcoin and ignore this FUD. Bitcoin has a lot higher to go, and I think we're in for a treat this bull cycle, which is still alive and kicking. But if you think I missed a critical piece of information, then please leave it down below so I can check it out and discuss it with you. This topic is so fascinating, and I love doing this research and diving into it for you guys. Also, can you please share this with your other crypto communities and other crypto friends so they can check it out and learn more about why they shouldn't be worried? Next up on this channel, I'm going to break down Celsius Network, a bear case for IOTA, and a deeper look into Polkadot. So please subscribe if you want to catch us in the future. I'm Kevin. Have an amazing rest of your day, and I'll catch y'all next time.